We'll be exploring a complex web of international relations, economic sanctions, and their far-reaching implications. Our focus today is on the ongoing situation between the US and Iran, where tensions have been escalating, and the stakes are higher than ever. The Trump administration's decision to impose stringent sanctions on Iran has sparked a chain reaction, affecting not just the two countries involved, but also the global economy at large. To understand the intricacies of this situation, let's break it down. The U.S. sanctions aim to limit Iran's ability to export oil, which is a crucial component of its economy. However, Iran has been finding ways to circumvent these restrictions, and the situation has become increasingly volatile. The blockade imposed by the U.S. has led to soaring shipping costs for Iran, making it difficult for the country to engage in maritime trade. The human impact of these sanctions cannot be overstated. Many Iranians are struggling to make ends meet, with basic necessities like medicine and food becoming scarce. The economic pressure is taking a toll on the population, and the situation is becoming increasingly dire. From a geopolitical perspective, the standoff between the US and Iran has significant implications for global markets. The Strait of Hormuz, a critical oil shipping route, has become a focal point in this conflict. Any disruption to oil supplies could have far-reaching consequences for the global economy, leading to increased prices and potential instability in the markets. As we navigate this complex landscape, it's essential to consider multiple perspectives and avoid taking sides. The situation is multifaceted, with various stakeholders involved, each with their own interests and motivations. The question on everyone's mind is, what's next? Will the US and Iran find a way to resolve their differences, or will the situation continue to escalate? How will global markets respond to these developments? And what does it mean for investors and consumers alike? These are just some of the questions we'll be exploring in more depth as we continue our discussion on the Riskwiser Zone. We'll be examining the potential risks and opportunities arising from this situation and providing you with expert insights to help you make informed decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and technology, where Indian company Netweb Technologies has just made headlines with a successful Rs 1,200 crore qualified institutional placement, or QIP. This development showcases the confidence of global institutional investors in India's growing high-performance computing market and AI ecosystem. Netweb Technologies, which offers computing solutions with fully integrated design and manufacturing capabilities, saw participation from prominent investors such as Nomura, Goldman Sachs, and ICICI Prudential Mutual Fund, among others. The QIP has not only strengthened the company's balance sheet, but also demonstrates its potential for long-term growth in the AI and high-end computing infrastructure space. It's worth noting that the Indian government's push for Make in India initiatives has been a significant factor in Netweb Technologies' success. The company plans to utilize the funds raised to support its working capital requirements, drive innovation, and deepen its technology partnerships. As we analyze this story, it's essential to consider the broader implications of India's emerging position in the global tech landscape. With companies like Netweb Technologies leading the charge, India is poised to become a significant player in the high-performance computing market, driven by its growing expertise in AI and related technologies. While there are risks associated with investing in any company, the participation of reputable institutional investors in Netweb Technologies' QIP is a positive indicator of the company's prospects. As we navigate the complex world of finance and technology, it's crucial to stay informed about such developments and their potential impact on the market. Welcome back to the Riskwiser Zone. The first one is about a couple who invested in a rental property, but soon realized that it wasn't as lucrative as they thought it would be. In fact, the owner of the property was working nearly 12-hour days just to keep up with the maintenance and management of the property. This story highlights the importance of doing your research and understanding the potential risks and challenges involved in any investment. The second story is about a Reddit discussion where entrepreneurs were asked what businesses are paying them well, but they wouldn't recommend to others. The responses were quite surprising, with many business owners citing industries such as landscaping, insurance, marketing agencies, and trucking as being profitable but also incredibly demanding and stressful. One commenter even said that their business was absurdly profitable, but they wouldn't recommend starting an agency today due to the changing policies, claims disputes, and online competition. These stories serve as a reminder that making money is not always the only consideration when it comes to investing or starting a business. It's also important to think about your lifestyle, stress levels, and overall well-being. As investors, we need to be aware of the potential risks and challenges involved in any investment and make informed decisions that align with our goals and values. It's also worth noting that there are alternative ways to invest in rental properties, such as through companies like Arrived, which offer a more hands-off approach to real estate investing. This can be a great option for those who want to diversify their portfolio without the hassle of managing properties themselves. In conclusion, it's essential to approach any investment or business venture with caution and careful consideration. It's not just about making money, it's also about maintaining a healthy work-life balance and minimizing stress. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.